Hi guys, and welcome to a video analyzing what's happening with the pound, with the euro. This is Isaac from Trade Simple Trade Smart, and I wanted to put together an outlook on what's happening, what we could have predicted, as well as how to react to what's happening in particular with the pound and pound related pairs. I'm going to be looking at pound dollar, and euro pound. And the two questions which people have been asking is this something we could have seen? And how do we react to it now that the UK is about to leave the EU, although it's a 2 year process? We've also got the political upheaval at the moment in terms of the leadership contest. We've had the Bank of England that's come out revising their forecast for UK growth to the effect that they're saying that we may need more quantitative easing. They're going to make more money available to the banks, and also there's a possible threat of a reduction in our interest rates over the coming months in the summer. So this is in combination, this has just driven the pound to levels that haven't been seen for decades. So the question we all need to ask is, one, is this something we could have seen? Two, now that it's happening, how do we react to it? How do we position ourselves as traders? Is the pound going to continue sliding, or has it hit the bottom? Will there be a bottom? And if so, how do we treat it? Is it likely to reverse? Is it going to continue sideways? So all those questions I wanted to address in this short video. There are two things I want to emphasize. Number one, although we're technical traders, remember we also need to bear in mind what's happening in the background economy as well, because the two work hand in hand. The reason technical analysis is so powerful, although there are a lot of people that would debate otherwise, the reason technical analysis works is because it charts what happens out there. So it's basically illustrating the sentiment that's out there. What drives sentiment is people's reaction. What people are reacting to is news and their perception of what will happen afterwards. So, for example, if we're going to get an interest rate reduction in the pound from the current base rate of 0.5% to, let's say, 0.25% basis point, that will weaken the pound. So if investors think that's going to happen, what we'll see in the charts is we're going to start to see sell-offs. We're going to start to see support levels get broken and a downtrend start to form. How long that lasts for is difficult to say, but the key thing is, as long as you've got a trend in place, then you trade in the direction of that trend until it changes, until you're proven otherwise. So hopefully along the way you should have had quite a few winning trades to make up for the potential losing trade or two you may have at the end when if let's say you catch the trend late. So the idea is we don't want to be the first people in, nor do we want to be the last people in. You want to be the person in the middle who catches the middle chunk of the trend, which is easier to predict. So coming back to the pound, what we have here, I've got a chart of pound versus the US dollar, and we're going to be looking at monthly charts because the monthly chart allows you to see the higher time frame perspective. We're going to see what's happening on a wider scale, and then from there you can then drill down to how you want to take advantage of that. But the wider perspective allows you to see what the overall market is doing, what the big players are doing, and it's very important to know that because they're the ones that drive the market, the trends. They're the ones with the deepest pockets, so they are the ones we want to take note of the most. So having said that, when we look at this, what we see is there are several things that scream out at us. I've labeled a couple of points here. Firstly, we see that on a monthly chart, we've had a massive drop, which started in 2006. This correlated with the financial crashes in 2007 when it started. It paused, and then we had this massive drop from 2008 onwards. That was a drop. Since then, we've not really recovered. Now, we've just been in a sideways consolidation. If you look at the top end colored line there, that shape there, the rectangle, you can see there was resistance levels here that were retested as support, and all we did is and I believe this was 2013 if I'm correct. So this was mid 2014, a couple of years ago. All we did is we rallied to the highs, failed, and we've been in a downward decline since. This is an example of a stop run right now, or a false break. You're going to hear those terms, especially on our sites in terms of the courses we do, because one of the things we focus on is identifying when smart money manipulates the markets. Oftentimes they manipulate it to make it look like there's a move that's happening when in fact they'll do the extreme opposite. So for example, in this case, we see here price was rallying, Now there was a strong resistance level here, which was support. This was a place that a lot of traders would have been caught on the wrong side, thinking, okay, we've broken out of this range, we're back to an upward trend. Therefore, a lot of people would have been long here. And what happens? We get the false break. It moves up, turns around aggressively after that, and heads in the opposite direction. The question is this a coincidence? I don't think so. In fact, I know it's not. This isn't a coincidence, because what you have to understand is what these levels represent are very deep liquidity pools. There are a lot of orders here which are stacked. So if you're smart money coming in with a couple of billion into the market, you can't just buy randomly, otherwise you're going to move the market. The idea would be to move the market in the direction you want, to get a lot of buyers climbing in. So let's say here, smart money, either institutions, were looking to take this pound dollar short, as in from around the 170 level. If they wanted to take it lower, they wouldn't just simply start selling randomly, because otherwise they're going to affect the market, and it's going to then affect their profit at the end of it. What they'll do is they'll move price up to trap traders, to make them think that price is going up. So what that'll do is that'll entice a load of buy orders, a lot of traders looking to buy going long, which allows smart money to then absorb all of their orders, which means they've got a lot of people ready to buy take the opposite side of the sell orders, they execute that, and then they reverse the trade. Simple, right? So this is exactly what happened here. We've had a consolidation, false break out of that consolidation, and a downward decline. Now we have a strong level of support here, and what I find interesting and also worrying for the pound is the fact that not only have we broken this support level, but we've stayed below it. Right now, these are monthly bars, obviously, so we'll know over the next few months whether that happens, whether we get a reversal back up or not. But look at the difference here. Price broke up and came back down sharply. Here we've gone below, closed below. This is the following month. Now let's see. Obviously, this is a big early part of the July. If in July we continue lower and we close below, then that's a sign that we could see further downside movement. Now, having said that, if we look at the overall picture, the downward move was down, consolidation. It only makes sense from a technical perspective that the move out of this consolidation should be in the direction of the original trend, which was down. So we should see further downward movement. However, this would imply that we're going to continue to see pound move to levels that are going to continue to break record upon record upon record, new lows, new lows, new lows. And the question is, how low can it really go? Are the fundamentals so dire that we could see pound effectively one-to-one with the dollar? It's not impossible, but it's highly unlikely. And there are several reasons why. Number one, the exit from the EU is still unknown. Its implications, people are still guessing at what the wider implications are. However, a lot of it will depend on trade continuing, and to the degree to which the trade continues with the EU, which depends on how well politicians or the next prime minister negotiate such deals. Based on the relationship, the interdependent economic relationship that the UK has with the Eurozone, I'd be very, very surprised, and we should all be very surprised and shocked, in fact, if we end up having a catastrophic deal, which means then all economic ties are cut and the UK stands on its own 2 feet. That would be difficult in the sense that we've got a lot of imports and exports that cross over the border quite a lot. So it'll be difficult for the EU to then alienate the UK and make it difficult for the UK to trade with the EU, because then the EU in itself would suffer, because it would have the second largest economy in Europe out of the equation. There are a lot of cars that are sold here, a lot of goods and products and services that are consumed by the UK from Europe. So it's not really in Europe's interest to lose that, theoretically. What will happen, who knows, because the whole political agenda in the background is also significant. The EU may want to use the UK as an example, deal with it harshly in order to warn other states or other members of the EU who may think about trying to exit. We'll see, right? A lot of this is unknown. We'll see how it plays out. So if it would have, in short, what I'm saying is it would have to take a complete disaster for pound to continue declining from a fundamental perspective. The technical picture here supports downward movement. However, what I would say also on top of that is this. We had the sideways movement and price came into the support. Now, this move you see up here in the last part, if I highlight it here, is just prior to, these are the few months prior to the Brexit, and here we were on the way back up. That was the day of the Brexit, and then price just smashed straight through this floor here, this support level. So there's a possibility that if that wasn't the case, we could have seen this move back up to these highs, which would have been in line with this range-bound movement we would have seen. So this slide out of this range is due to that, due to Brexit, which I would argue a lot of people didn't foresee. Now that it's happened, what we can see also is from an Elliott wave perspective, we had 1, 2, 3, 4, a clear 5-wave structure with price at the typical termination point for wave 5. Those of you who don't know what I'm talking about, this is all covered in our structure course on Fibonacci, but just understand that we use Elliott waves to understand market structure. Market moves in generally a 5-wave format, and each wave conforms to specific characteristics. Also, the end of each wave, which are the potential swing lows that you see, if they fulfill certain Fibonacci numbers and levels and criteria, indicate that there could be a high likelihood of a reversal up. We are at one of those levels where we could see a bounce off this. How long that bounce could be is difficult to say. It could be a shallow move up. It could be the beginning of a new trend. Difficult to say. But the point I'm making is, rather than argue the point of we have broken out of this consolidation, so we're going to see lower prices, I favor the viewpoint that we are reaching a low from which we could see a turn for a significant move up. The other thing that supports that viewpoint is if we look at RSI here, at the low, we are entering the oversold area. And if we look at where we were, each time we enter the overbought, oversold, if we look at overbought area here, their price moves out of that, we get a bit of a decline. Second time it happens here, price goes above this overbought area, which is the upper line here, comes back down, we get a decline, and then that happens lastly here. It just peaks it, turns around, and we get a significant decline. And you can see here of the lows, we go into the oversold area, we come out of that area, we get the push up, and it stays up until where we are down here. As you can see, now we're in, we've just taken out this low, and now we are in this oversold category. What I would have wanted to see here would have been divergence, which we don't have. And divergence means as we make lower lows in price, we make higher lows on the indicator, momentum indicator like RSI, but that hasn't happened. All right, but that's not to worry. But the point I'm making is that we could be approaching some lows, so there may not be much further for pound to fall before we see a move back up. How do we trade this and execute this? Well, if I go to a lower time frame on a weekly, we can see here that we've got price in this weekly chart has just gone down, so there's not much we can interpret here. You'd want to see a significant reaction of this at least back into here, into sort of the high 139, sort of low 140 area before you'd be comfortable looking for long-term longs. In the meanwhile, what I would say is you could trade a short-term bounce. Okay, this is the daily chart, short-term bounce up until say around this level here. But as long as we stay below the support, I would favor the short. Now you've got to remember here, we're talking about moves of potentially 500-600 pips anyway, which is quite a lot for those who swing trade. Those of you who want a longer term move, 1,000, 2,000 points plus, then you'd really want to see price clear this level before, testing at least this level here, if not some of these higher levels. So in conclusion, what I would say on pound, without kind of going into intricate detail, is right now I'd argue we're approaching some lows. So I'd expect a bounce of that to the upside, and at least a test of the high 130s, low 140 levels. So there's around a potential 1,000 pip move up potential. And then after that, you'd want to see a close above 140 before looking for a really long-term position to buy and hold. So that's pound. Also remember, whenever we are analyzing things, we're looking for clarity. Sometimes that can be very crystal clear. Other times we may need to have a bit more time to form that. Right now, although the clarity of pound is quite clear, I'd say, in terms of what we would expect, we still need to wait for signals and signs that that has actually happened. So it's not just to jump in and buy just because I'm saying we're approaching some lows, but it's to look for an opportunity to have longs, to have confirmation that we have got the reversal. So things like, you know, getting a rally close above significant turning points, like some of these swing highs, would be an early place for potential longs. Another place would be, say, above this swing high here. So you're looking for strength. Look for strength to come into the market. And always when you have a potential turning point, you want to have a trigger that gets you into the trade. So that could be, for example, a moving average cross. It could be break of resistance level. It could be break of trend line. It's got to be at least one thing. I would argue even two or three to give you that high confidence that buyers are now coming in to move up. Because remember, the danger is that if someone's been short all this while, this bounce up could just be profit taken. So you need to be able to distinguish between profit taken and actual a reversal of the trend. All right, so I'd say at least you want to take out a high plus get a moving average cross, like a slow and a fast, like a 5 and 20 cross or something like that. And if that materializes, then you can start to take trades. So that's a pound. The chart that's also interesting is euro dollar. Now my outlook on euro dollar is bullish for several reasons. The first reason is we can see that this is again a monthly chart. I've got a lot of lines here drawn from different fib ratios and different anchor points. What I'm going to highlight is the main ones that we're looking at this moment in time. We can see here we've got a structured move down, and then we had a nice push to the downside, and now we're in consolidation. We've been consolidating for the best part of a year. However, this move down is a correction against this upward trend. So the outlook on euro is bullish. We're taking into consideration that we've moved down, but this is moving down against this, so that trend hasn't been violated. The point at which this trend becomes violated is when this low is taken out. So which means from a long-term viewpoint, we're only interested in looking for longs if we're trading only in the direction of the trend. You can counter trend. I'm just going to focus on trend trading for now because it's safer. Unless you have, for example, on what I was saying on pound, someone could argue, well, moving, buying here could be counter trend. It could be, but I'm saying there are enough reasons to argue that we're hitting close to the low that I'd be happy to look for long opportunities. That's the difference. I'm not looking for long opportunities just randomly. There has to be structure and reason behind it. So going back to euro, we've got the downward movement, which is a correction against this upward trend, and there are several factors coming together here. What we do is, what I've looked at is the corrections each time it's gone down, and projected that from here. We've also looked at multiple ABC completions. We've got an ABC here, here. We've got another one. There are multiple ABCs within this which complete within a range of each other. So each of these groupings represents a potential termination point. The one I've highlighted is the one that meets a few ABC corrections with a correction, a retracement from here. So I want to make sure that we have at least one of these retracements, a 786, a 618, a 50%, a 685, 886, whichever one of those. I want price to touch one of those plus some of these multiple ABC corrections, and see if we've got a grouping that we can then look for to act as a level of support, and we have that. The support level we have is highlighted here. It's around sort of 1.080, 1.08 to around 1.0650. Yeah. So between these two, there's about 150 pip difference. That's the potential place where we were expecting price to bounce from, and you can see that support level is holding. Right? It's held because price has gone straight into it. I'll highlight it a bit more. It's gone straight into it, came off it, moved sideways, went down, came straight back up. So it's telling us that there's support here that's holding. Now, I could even lower this a little bit to bear in mind what's happened here. So as long as we stay above this level of support, then I am bullish. The other thing we have in our favor is when price came into it the first time here, we had an oversold reading on our RSI. And if I squeeze that up a little bit, we can see that when we go into the extreme ends here, we had an extreme reading there. Let me get rid of this. Okay, we had an extreme reading here. Price pulled back a little bit. We had an extreme reading up here, and you can see price pull down a little bit. Next extreme reading was up here. Price pulled down a lot more. Next reading was up here, and price came down quite a bit. And since then, we've not had any reading in the overbought up here or in the oversold down here category until now. If we look at the last time we had that was just recently when price came into this level of support and it was oversold, and since then we pushed back above it. So the indicator, momentum indicator, favors a bullish move to the upside, and we're holding above this support. So I'm bullish on euro, and if we look on a weekly chart, we can see we're in sideways movement. So really, you want to be looking for this is the daily chart. On a daily, there's a bit of a structured here. We can see there was a nice clear ABC correction here. So you want to be looking for longs ideally to hold on to. If you're looking for swing trade opportunities, I'd be looking for longs. If you're looking for intraday, then you can look for longs and shorts. But if you're looking for something to hold on to, then I'd argue a long will be a better proposition than a short. We can see overall structure here is not very pretty. You know, we don't get strong moves up, you know, a strong move up, a pullback. We get overlapping price action, which means that this is difficult to trade from the perspective of that once you're in a trade and you're trading your stop, you're gonna get stopped out even though you may want to hold on to the trade because price tends to correct quite a lot here. You can see that the price action isn't very smooth. So, and if we compare that with the previous time, like here, you can see price moved in one direction, so you had very little correction. So, you know, if you were trading your stops above the swing points here, each swing point, you'd have remained in the trade until the very end. Here, however, you can see we're in consolidation. So really, before you know, if you're going to take this, I'd favor having a target, you know, taking a trade and going for a specific target. And once we clear out of this, if we do clear out of this this whole consolidation, then I'd say we're in line for moving significantly to the upside. If we look at the monthly structure once again, since this is a correction against this upward trend and we've had multiple ABCs complete here and a strong level of support, if this moves out of this consolidation, then it should, we know, it needs to technically go back to test this level, this high at least. That could materialize over a number of years. Of course it can. However, along the way here, you can see there are acceleration points when price goes down aggressively. So we could have an acceleration point when price moves up aggressively. So you can have significant movement within a few months, enough for you to be in and out of a trade rather than be in and out of trades, you know, rather than sit in a trade and wait for years in order to get a good reward to risk ratio. So that's euro dollar. So the outlook for long-term trading is bullish. The reason I'm looking at long-term trading is because the short-term trading at the moment is quite volatile. So unless you know what you're doing, you can get hurt. If you know what you're doing, then you can go in either direction, long or short, because you're getting good ranges in each day to enable you to do that. So that's euro dollar. Lastly, I want to look at euro pound because if we, you know, if we're looking at pound, you know, potentially weakening, you know, at the same time we're approaching a turning point, so therefore we could be bullish in that. And then euro, where does that leave the euro versus pound? It makes sense to look at it. Well, we've had here a correction against this dominant trend, and we've got this massive ABC correction that's taking place. It's terminated and price has rallied significantly. This is the kind of move I'm saying could happen on euro. Out of a consolidation, you tend to get some explosive moves, and that could happen. I wouldn't be surprised if it does happen in euro dollar. So look out for that. So here we've had that happening. We've broken this upward sloping trend line. So euro pound I'm bullish on because this was a correction and we had multiple ABCD retracements against the dominant move, and by virtue of that we should go to test this high. So I'd say euro pound for long-term trading, you're better off looking for long positions. Uh, as you can see here, this is the daily chart, massive rally. Obviously, what move something can't move up indefinitely, so you want to see a meaningful pullback, a decent pullback before looking for another long opportunity. So that, let's wrap it up there. I know I was quite brief on euro pound, but to be honest, I mean that the chart just says it all. We're bullish. We had a turning point here where price bounced off this support. Also, we could see that on the indicator we had it was oversold here and it's rallied. We could see we're approaching the overbought area, so therefore that's why I'm saying it's better to wait for a bit of a correction rather than jumping in long, because notice what happens every time it goes into the overbought area, it tends to correct. Right here, okay, it didn't correct this time, it moved sideways, and then but then shortly after that it went up, and then since then it's been in a downward decline. So that's euro pound. Well, I've looked at pound, I looked at euro. I hope you got something out of that. This is slightly longer than I expected it to be, but I wanted to give an outlook on what's happening and also to highlight how to use different tools to do meaningful analysis that you can then be confident to trade from. So I hope you got something out of that. If you want to know more, all of this is covered in our Fibonacci Advanced Masters course, and the manipulation is covered in our FX course. Have a look at those. If you've got any questions, then let us know. Until next time, happy trading and speak to you soon. Bye bye.